This is Dave Putz from JKP Holdings. As I'm sure you're already aware, we provide some great tools, resources, and available assets. We have a great Facebook page and a Facebook group. Within the Facebook group, you can post questions, get answers, and see the latest information in the note space, East Coast Distressed Note Investing. We also have events inside the Facebook group of our previous and future Facebook Lives. We have a resource list that has agents, attorneys, servicers, and whatnot, where you can turn to get information. You need to contribute one resource and then check your email for direct link. Our available assets can be gained by filling out our NDA. Simply fill it out and we will review it to give you access. Our weekly Facebook Lives and webinars are held on YouTube. You can access it through our website at jkpholdings.com/webinars. You can also sell your note and let us know more about the information by going to our Sell My Note at JKP Holdings. We have a great due diligence platform where you can go there, provide information on our property, and we'll give you data, agents, and local rental comps. Consulting. If you have questions about a specific deal or questions about notes that you want one-on-one conversation, feel free to reach out to us. And last but not least, check out our beginner video series. 20 videos, all there for you to review, check out, watch again, and ask questions. We look forward to having you join us.
Hey everybody, Dave Putz here from JKP Holdings. Alongside me, as always, Mr. Nathan Turner.
Hello, hello.
Hopefully everyone's having a good week, a good whatever, right? As long as everyone's doing good stuff right now. I think we wanted to connect. We haven't talked to each other recently with all the conferences going on and just school starting. Nathan, how you been, bud? I know we haven't seen each other on this live call recently. How you been? What's been going on?
We haven't seen each other for a little while now, but yeah, no, it's good. Everything's good. We're you get this too, but we're into beautiful fall weather. Leaves are changing color. We've got a big red oak in our front yard and it's turning red and beautiful. And yeah, it's gorgeous. And so we're loving the weather, loving the work. Work is always going and things are moving and progressing. And
we're supposed to get 80 degrees here in Jersey today. And I'm not sure what, like, go outside, not go outside, it's summertime, and it's supposed to be 60 on Sunday.
Yeah.
So good football weather
on Sunday. Yeah.
So you went on all these conferences, you got some good context. I'm sure everyone saw the videos that you put out there. You know, did those re-energize you for this fall? Like just getting out there and shaking hands again?
Yeah, you know, it was really interesting. Being away from conferences for so long, I came to a realization that I think I don't think I was ever like depressed, but I could tell my mood was just lower and I wasn't as energized as usual. And so getting out to a conference like that was a big boost. And so it's exciting and it's fun and it's good to go and talk to people and see people and interact in person. It makes a difference.
Yeah, shaking hands with somebody, having dinner, or just talking with them, it just is so much different than picking up a phone call or doing a Zoom call.
Yeah.
And I'm sure product is going to be, we were talking with a couple of people in our investment community last week, and they're talking about the product at the top is changing dramatically right now. And in the first quarter, second quarter of next year, could be a possibility of a blow up, right? Not at the point where we had back in early 2010s, but just the change was dramatic. It was crazy. And they're seeing the top end be just as crazy. And I look forward to that.
Showing signs of cracking is what I'm starting to see, where some of the values have kind of edged out. They don't seem to be going higher in certain areas. There are other areas where it's still going up, but in some areas, that's what I'm finding is that values seem to be topping out, and it only goes one way from there for the short term, and then back long term, of course, it'll go back up.
So it's interesting you say that, because inventory is something a lot of people ask about. They want to know more about it. They want to know where it's at. They don't feel that what we're saying is possibly true, they didn't see anything. But what you don't realize is the conversations that we have outside of this private kind of group we talk about, right?
Yeah.
It's different. So you get in contact with people that you know who bought product in the last 3-4 months, who are buying at a much higher scale. You
Yeah.
get the knowledge of what's happening, and it's different from last time.
And you know, we talk about, I'll talk to somebody new to notes. I say, I will tell you anything and everything you want to know, except where I buy,
yeah,
you know, who my vendors are. And we're about to let the cat out of the bag on a big one.
yeah. And let me just preface before we introduce my man here. Sometime we had this conversation with the new investor recently. They said, Dave, just share your contacts. Some of that is private to us. And the second part is, if you cold email these big funds, you may not get the same response we do. It's
Probably
a relationship
not.
base.
Yeah.
Right. So let's let one of the cats out of the bag.
All right, there it is.
Mr. Chaz, what's up, buddy? We're sporting some Revolve equipment today for you.
Man, I told you both off camera, but I'll say this on camera. You're definitely getting a swag bag here for the holidays. It's en route for sure.
Awesome. It's awesome.
And chocolates, we're making chocolates at the end of November. So it's coming your
Bring
way.
those on. Those with a nice bottle of wine over nice fire is a good day, my friend.
So we were talking pre-camera about all the stuff that's going on. Nathan and I have known you, I think my entire note career, I've known you. It's one of the kind of relationships that's been ebb and flow for years. The respect is mutual. It's awesome. But a lot of people don't know who you are. And I think they should. I mean, you've done so many great things in the note space and been so real and been so honest. And wear two hats. You wear the hat of understanding our level, and then you wear the institutional hat. Can you share a little bit about how you got started in notes for those who don't know you? Hey, fellow note investor. Are you looking to learn the basics of note investing so you can get started? However, you don't want to spend a few hundreds or thousands of dollars and hours online on some training program? Have you thought about attending a notes conference? However, you don't want to spend the money or the time away from your family. Well, we have a tremendous beginners video series of 20 different topics, with each video being less than 15 minutes. This means each video is less fluff and direct to the content. Visit www.jkpholdings.com/beginner-series to learn more. Again, www.jkpholdings.com/beginner-series.
It's so ironic that we're seeing a plant behind Nathan's shoulder, because I felt like fresh out of college, I was watering plants and picking guys up from the airport at an asset management company that what I felt in 2007 was one of the first to market regarding buying big bulk pools of delinquent mortgages.
Mm-hmm.
And so I was so new to it. I felt like in college, I got a little bit of a background in finance, especially with like a focus in real estate. So always had a passion for it. So I said, look, I just want to be around it. It so happened to be that, you may see some football helmets behind me, but I tried to do it after college, and I know that the joke is not for long. It was definitely that for me. And I had an agent at the time who was trying to get me onto teams that says, look, there's like an epidemic starting to happen. Mortgage loans have been given to people who could not afford them.
Mm-hmm.
And they've been given to them for almost a decade, call it the late 90s through the early 2000s.
Yeah.
And it's created like a $7 trillion market with a capital T. And you guys can you guys can see the evidence now where Fannie and Freddie are doing like $1 trillion of new issued mortgages a year. Because ever since this pandemic happened, you guys, the house and I'm coming to you from my house. This house, your house became your everything. We had to stay at home. We had to get resourceful. So as a young man out of college, I really started to learn first and foremost. So wait a second, you can buy the mortgage debt from the bank, and then you can buy them in onesie, twosie level, and you can now collect on that debt if they so choose to start paying again. Or if they say stop calling, you can actually foreclose and take the house back. What?
Yeah.
That's how I started in the business. And I would say that after a few years of just consistently applying things that I did learn in sports, which was to outwork the person in the room, right? Be the hardest working guy. And so I just put the time in so that by like my later 20s, my early 20s, I was managing how to buy and sell this mortgage debt to investors all across the country. And then what so happened is I met a guy that was doing it not in the States, and he was doing it in Canada. Right? And there he is. And so before you know it, you start building relationships, because what we did as a buyer or an investor is we knew that we had to raise a lot of capital. We had to get infrastructure wise, we had to get compliant. We had to do right by homeowners that did want to pay and stay. And we also had to set up infrastructure for houses that were vacant, that were actually causing neighborhoods across all of our country, Flint, Michigan, Cleveland, Dayton, Ohio, to name a few, were blight between 08 and 13. I mean, you couldn't even want to drive a car down these places because it looked like The Walking Dead. The people hadn't been there for months, if not years, boarded up. So where I'm going with all of this is we knew, and what we saw was, hold on a second. These houses are being sold like Costco in big tranches, okay? You can go, and there was no real market for an investor who had 100 grand, 50 grand, 300 grand to go buy their local auction, their local fix and flip. Why could they go do that? But they can now not get their hands on this space.
Yeah.
So I will say that in early 2009 and 10, we did develop a bridge, a pretty strong bridge now, this many years later, that allows you as a new incoming investor to say, look, that's a $600,000 house. You mean I can buy that for $350,000? What? In today's market, right? Where things are going over list, right? Where there's less than 2 months of inventory across the market, across every MSA in our country. So all that being said is that there's you know, from using that plant as my analogy, is there's growth in this business that truthfully, you guys, our company today, we can get into that, has definitely grown really through 2020 and 2021 from the comfort of my house, right? I have team members in New Jersey, Oregon, California, and Irvine, Tampa, Florida, and now I'm in Dallas, Texas. I mean, literally, we're touching almost every corner of this country, yet none of us are under the same roof.
Yeah.
So we're all learning how to do this virtually, and we buy debt, and we buy banks. We buy houses and assets all across our country, and we manage them in this function, and we can get into the infrastructure there regarding vendors and stuff like that.
So anybody know what kind of tree that is? What kind of that one and that one?
That's a money tree.
That guy's a money tree. That one's a dragon tree.
A dragon tree. Oh,
meaningful.
See, we had to use the nature in this in part of this deal here. So
let's look at this individual. Let's call him Bob Schmo, right? Bob Repass. We'll call him Bob Repass, right? He get in the space. He's saying hi. And he has 50 grand, 60 grand to his name, and he wants to get involved. How can he approach someone with the asset level you guys get involved with and be successful to reach out? And we don't want people coming into space and lying. We don't want people taking on the assets and brokering it. What should that person do and not do to make sure that they're successful?
If you're going to want to step into this space, which is to buy residential real estate for steep discounted prices, you're not going to be acting as an individual. You're not going into an open house on a Saturday or Sunday, walking through it with your wife.
Recording in progress.
Walking through it with your wife or your husband, and you're starting to, act like, hey, look, we like this house. Here's our offer. We open escrow. Just going to tell you what we've tried our best at doing is kind of mirroring that process and buying notes. For example, you're going to see a spreadsheet. I'm sure many of you we call them a tape. You see these spreadsheets come across your inbox. They're filled up of addresses. These addresses are located in all different states and cities across our country. So cool. You can quickly copy and paste those addresses now into Zillow, into realtor.com, Google Earth. Get yourself a sense of what you're looking at, especially if the house isn't in your backyard. Okay. So truthfully, since you're going to potentially now step into the space of being the bank, you should have this protected by an LLC. You should have this protected by a vehicle that is not Dave Putz, Nathan Turner, right? The homeowner should not be calling you in the middle of the night, letting you know, hey, I'm going to make my payment in the morning, right? You should be acting and treating yourself as a business. So do that. So with an LLC, right? Especially as well, you want to hold that real estate, not personally, right? So when it comes to how do you get in, is have a little bit of footwork done prior to speaking with sellers. Have your LLC set up. Know where you want to service the mortgage. What does service mean? It's a property manager for mortgage debt. And they're 50 state license compliant, NMLS license. They carry all of the essential risk and communication between the homeowner and you as the lender. You should have a third party, just like if you were a landlord and you had rentals throughout the country, you have a property manager who collects the payment and then remits you the difference, right? After he takes his fee for managing that house for you. The servicer is exactly the same thing in our world. So you should have your structure set up. You should have your servicer set up. And you should then really know if you're a running team or are you a passing team? What does that mean? Do you want cash flow passively? Or do you want to get into the fix and flip business? Because you know how to buy houses for cheap, you maybe have a deal at Home Depot or Lowe's or some local shop that can get you some lumber, because lumber is expensive today, but you can get lumber for cheaper than everybody else can. And you now can do rehabs at a really, really wholesale cost. So now you're saving yourself a ton of margin when you go to flip these homes. I'll tell you, there are people that eventually you become both. But I'll tell you, get strategic at one thing. Become good at throwing the ball. Become good at running the ball. Don't try and do both at the same time, right? So just a very high level was structure, just an LLC so you're protected, servicer, and playbook. What do you want to do, right? So hopefully that gives you a little bit.
So now you have all that set up, right? And you're looking for inventory. What should an investor who's brand new to the space do to successfully find inventory, right? And how should they approach? What should they do with the inventory? What should they not do with the inventory? And basically, what does an NDA actually mean for some people?
Look, I'm going to put you right on the spot. I know we're recording here. So truthfully, you two are a humongous resource for everybody listening to this. I'm a seller. I know that I'm going to consistently put out product. We do want to align ourselves. Let's just be real here. We want to align ourselves with real capital. We have a lot of headline risk to be concerned about, right? We purchase assets from major tier 1 sellers, folks that all of us have an ATM card at, and that's legit. And so also there are government GSEs that we also are vetted and approved to acquire from. So there's risk involved when you try to step into the bank era and collect on debt, right? Because first and foremost, just so everybody understands, if you can buy mortgage debt at a very steep cost and you can get that person to perform and pay on their mortgage again, That's the best outcome for you as the lender and them as the homeowner. Keeping people in their friggin' house, keeping families together, allowing stability across our communities to stay there. Foreclosure is the worst thing that we want to be doing. That's the most expensive thing to do, by the way, in this business. So if I can get to a resolution with the homeowner, that is the best outcome. So look, if you're going to step now into the shoes of a bank, the first thing you should be looking to do is to get them to perform again. Because guys, here's the play for you all that want to learn how to manage mortgage debt from potentially your house, the beach, your mountain house, Europe, Canada. What you need to do is you need to be able to acquire mortgage debt for a discount. You need to get Mr. and Mrs. Smith to start paying on their mortgage again, season up those payments. So now you're getting mailbox money and you're also keeping them in the home, win-win. And then about 6 to 9 to 12 months later, at whenever time you choose to exit the deal, why don't you sell it for almost what the whole mortgage balance is worth to somebody that wants to keep that cash flow until that mortgage loan matures? Boom, you've quickly arbitraged your position inside of a year and you've made a really good return and you did right by those homeowners. So just a play, that's a play that we do here at the company. So kind of don't let me hog all the mic, you know.
So,
So
and that actually goes back to, you know, what do you want to do? Because there's so many different ways you can split this. When I very first started, we were looking for properties in Columbus, Ohio. That was our main focus, was acquiring the property. So we would look for like loans, non-performing loans on vacant property in Columbus, Ohio. You can totally do that. It does limit you somewhat, but if that's what you want to do, you can totally do that. And then we would either get a deed in lieu or foreclose and take back properties that way. And so
I love that. No, look at that play, because what were you going to do with those vacant homes in Columbus? Were you guys going to fix and flip them?
We didn't even. Well, what we would do is we would sell or finance them back out.
Oh my gosh.
To new people.
Yep, because those people needed you to come in to be that finance arm because they couldn't approach a traditional bank to get a mortgage.
Exactly.
Again, another win-win. Cash flow along with helping people get home ownership. Creative way, but you all bought it through the note though, right?
Yeah.
So it's a spin-off. It's crazy.
But figure out what your avenue is going to be, because that will determine what product you look for, prices you're willing to pay. That it determines so much. So figure out what you want to do with it before you start. That's going to help a lot.
So should someone come up to you, cold email, I want assets. How can a proper person come approach you guys and say, I'm looking for assets? I have $5 million, I'm looking to buy assets. And when I have 20 grand in the bank, right? What's appropriate, you know, because some people come and go, I have 10 grand to spend, but I'm not going to approach Chaz. He's a big fund. I can't buy from them with 10 grand, 20 grand, 30 grand. I need $1 million. Can you speak to that person?
Yes, because, you know, we're selling a deal today for 13 grand. And so, you know, there's mortgages we've acquired for 5 grand and resold them for 7 grand.
Yeah.
Right. And now that 7 grand, it was collateralized by a $30,000 home. I mean, yes, there are definitely $30,000 homes in this country. It's wild. It's like you've gotten yourself into a whole new party. You're like, how did I get here? But yeah,
the last one I bought from you guys, Chaz, we paid $16,000 for it. So those are out there.
Yeah.
Then, you know, 29, 27, 20. So that's 59, 68. So it's all over the place.
So I just want to let new people know the fact that if you're walking in a space, please don't tell people you have $5 million to spend. Just be open and honest of what you're really doing, right? And tell people, hey, listen, I have X amount of money and I'm looking to buy assets, right? And we want to make sure that the new investor says, listen, don't be nervous about approaching Chaz, but be open and honest and say, listen, I'm new to the space. I want to get involved. I have some capital. I don't have a lot, right? They signed the non-disclosure agreement. And for those people who are feeling better now about approaching someone, a hedge fund that's scary, big and bold, right? Don't lie. What should they not do with the inventory that you share with them?
So a part of the non-disclosure and part of the vetting process that we go through is really, if you step into our restaurant, I hate to use this analogy, we're hoping you want to sit down to eat, right? We hope that you don't want to just come into the restaurant and just hang out in the lobby. So we want to make sure you are who you are and you are ready to dine. And that being said, that's a part of our getting to know you process. We're looking to understand, do you have a background in this space? Do you potentially need a little bit of, let's just say, education, some resources, some tools to help you feel a little bit more comfortable at moving forward? And to be honest, we are not an educator. We're not in that space. There are a lot of people who we've partnered with to help you get real comfortable at starting to make decisions and call plays with confidence. That's who we are. We're here to show you that we are very diligent in our homework, in our underwriting on the stuff that we purchase. Mm-hmm. We make sure that, because we buy firsts. A lot of people, as you very well know, audience, that you can take out a first mortgage and a second mortgage. Yeah. And there are a lot of people that play in the second mortgage arena. And there are a lot of guys that just play in the first mortgage arena. Yep. Be honest with you, there's some guys that do both. And so for us, we specialize in the first space. We do like to partner with guys that do seconds, because a lot of banks will sell both a first and a second. And it's good to face the bank as a big party, because now you can take down more product from them. But what you should not do, Dave, is to take our food and walk right out of the restaurant and not pay for it, right? So sticking with the analogy. So the whole point is that, the whole goal is that if we show you something, we're hoping that you diligently will roll your sleeves up and see if any of the houses and potential opportunities work for you. If they don't, no harm, no foul. Just let us know. We'll look to future opportunities to work together, right? What we don't want to do is have you take our pool, post it on LinkedIn, or the internet, and act like it's your portfolio. And then, by the way, then send it back to me and ask me, do I want to pay 50 cents higher than I bought that pool for? It's crazy. So no, what we don't want you to do is start getting into a position where you may not like something and you're now going to show your neighbor. And that neighbor could potentially go and door knock one of these homes and violate RESPA law. And now we're into some serious compliance issues that are violation of the non-disclosure and the stuff that we kind of did to get to know one another. So that's kind of why we want to make sure you are here for a reason, and we want to transact. That's what we're here to do. We're here to trade. We're friendly. We're fun. We like to joke. We enjoy this business. Life is too fragile and too quick, and we want to enjoy what we're doing. We are who we say we are. We don't want to, there's no smoke and mirrors. There are no middlemen. We are not a broker. We put up our cash. We own everything that we put out. And so we just ask for you to approach us in the same fashion.
Yeah. Yeah. And again, that goes back to that whole relationship building aspect that we talked about earlier. Like that is what it is. So if you show up and you try to misrepresent yourself, even just, making it sound like you're a little bigger than you are or something, it's not worth it. You'll get found out and you'll look like a fool, and you won't be taken seriously going forward.
I would much rather you be very transparent and direct and say, hey, look, I know the capital. I personally don't have the cash, but I know somebody's going to put up $250 to take this package down. Mm-hmm. But what I would prefer you do as a seller is secure that $250. Mm-hmm. Get that into an account that you have control over, right? So in the event of the $250, you only want to wire us $80 because you only liked X amount of the homes versus all of the homes for $250. Then now that's your control. That's your source. So I couldn't agree with you more. Nate, when I'm out working to raise a lot more capital, both equity and debt, a lot of the questions that I get from bigger sources is, So how do you get this product? Right? Like, I'm like, well, isn't that the $1 million question? Like, that's the secret sauce, right? But let's not fake anything. It's relationship based.
Yeah.
Absolutely.
They know that I'm a principal where that I'm not going and brokering their deal. I have the capital, I have the cash in our account. We've been around doing this now for almost 15 years.
Mm-hmm.
And here we are as a known counterparty to very major sellers. So now we do have flow, right? That's really the key to this business that you all have to understand is that when you go to the auctions or you watch, these, look, I love Chip and Joanna Gaines. Look, I'm in Texas. I love those. They created an empire. I can't go to Target now. Their throw pillows are like $250. I'm like, your blankets are like $800. I'm like, come on. But no, good. So they created a really glamorized way of showing how to really kind of charm up homes. Yeah. Buy them for low, buy the rough lookingest home in the block and make it look really good, right? Well, we do the exact same thing that they do, yet we're acquiring it for far cheaper than they are, and we're still doing the fix and flip. So you can imagine our margin is wow, right? Yeah. So it's just so funny because the question I always get is, why doesn't everybody do this then, right? And I don't have a magical answer for you, to be honest with you. The answer is I'm kind of sick of trying to convince anybody. If you get it and you like real estate and you prefer paying top dollar, I love you. I'll cheers you at the bar. But if you are legitimate about real estate and you want to acquire it for far cheaper, because we all know in real estate we make our money on the buy, then we know that let's buy it for the cheapest cost.
Yeah,
and
of course.
You got to learn. You got to educate to do it.
Yeah.
So one of the listeners asked is that, and I think we answered the question. If we did, guys, feel free to jump in here. But how can someone brand new reach out to Revolve and get a hold of their asset list? What's the process? Do you acquire a kind of, proof of funds and a, letter of intent? And what does a person who's new do to get your asset list?
If David Putz and his wife were hanging out on Friday night and said, look, I heard about Revolve. I want to go check them out. Our website is welcoming and friendly, and it is very easy to do from an iPad, smartphone, or your computer. And it allows you to, there's a get started button right on our website that walks you right through kind of the courting process. We want to get to know each other. I kind of want to understand a little bit about your background, because for me, if you came into a clothing shop and you said, how can I help you? And I'm here for sandals and jeans. And then I go ahead and put out, sweatshirts and beanies. You're like, did you hear me? I wanted sandals and jeans. And so I want to understand, are you a cash flow play? Are you a fix and flip play? Do you like pink houses, purple houses, right? Because for us, we are acquiring product from Maine to San Diego, from Seattle to Tampa. We buy in all 50 states. So if you are on the East Coast, I don't want to show you a bunch of stuff on the West Coast, right? I want to get you comfortable in your neck of the woods. So what our sales guys, what our asset managers and portfolio managers would want to do is get an understanding of your criteria, your capital amount, your infrastructure, your backdrop, right? That allows us to put stuff in front of you that it condenses the time in which we can transact. Yeah. I hope that when you come to sign up, you don't want to just looky-loo, right? I hope you're not coming into the restaurant to do nothing. Yeah. But the whole point is that by getting signed up at revcapgroup.com, if you Googled us, you can find us. And it's real simple, Dave. But I would say that if you want to really scale up and take down volume, it's going to be about a relationship. Okay. just like the conversation, Nate, that we had off camera, it's going to be a very similar deal where I just want to make sure that I can tailor a portfolio to how much you want to deploy.
Yeah.
And I want to make sure that you can acquire that at a price that you're leaving enough meat on the bone. Because guys, this really isn't cheesy. The reason why we have a business is because we are able to get investors like you to get really good at underwriting, purchasing, managing, and selling. And then before you know it, you talk to your buddy who had $500,000 who retired, and then you guys rolled that $500,000 into $1 million. And before you know it, you're a fund manager, you've retired from your day job, and you're doing this full time.
Mm-hmm.
I mean, that's why we have a business, because we've done those for people a lot of times over the last 10 plus years.
Yeah.
And a lot of, look at the two guys we're on the screen here with, right? This is now, Nate, this is your full-time gig. This is what you do, right?
Yeah.
So I'm talking to you monthly, putting portfolios in front of you, because that's our deal, right? We've got, and what's cool about you, Nate, is that you like assets that other guys don't like.
Yeah.
So I'll show out one portfolio to Nate who likes this, and another guy who likes this. There's no overlap, and then the entire portfolio for us is gone.
Yeah.
Now I've unlocked cash within those assets. I redeploy that into a bigger portfolio, and we continue the chain. So it's a good system.
I think one of the questions.
So just one, pro tip. And Revolve makes this super easy. You'll have a recent BPO, you'll have a recent title report, you'll have the information that you need to make a decision quickly. So make a decision quickly. And that's my, I guess, advice to somebody is you have all that information. Yeah. I do double check, and not because I don't trust Chaz at all. It's more that I don't necessarily trust the information that Chaz was given. And so I'm just verifying that and just making sure that BPO really is what we all think it is. And same thing with the title search, just making sure that that's what we all think it is, so that everyone can be on the same page. Once I've verified that, and which I can do in a day or two, funding comes next, and that, the whole transaction can take place in 1 week, Monday to Friday, it can be done. And if you can do that, and if you do that, you'll get tapes more often. You'll be able to do more deals.
The worst thing you do is don't fund, right? You go through the whole process and you're like, last second, for no reason at all, hey, I'm backing out. Like, listen, people understand things happen.
Yeah.
It's just upfront, honest. Hey, listen, it's a little more money than I wanted to spend. I have some capital, but I don't have enough. Being open and honest versus, hey, I'm going to fund. You put a date, and that day of you don't fund. You can get blacklisted from company like that. So 2 questions for you, Chaz. Someone asked about a particular state. I know you guys buy in all 50 states, and I'm sure there's some states with more assets than others, right? But that ebb and flows. That's not consistent. Where it's like this state, you see a lot of loans this month, next month maybe a different state. It's not a one state per se. Have you seen any kind of translation of what states, like back when we got started, Ohio was hit hard, and most tapes were full Ohio. Yeah. Have you seen any kind of trends recently?
Fantastic question, because yes, if you would have asked me prior to the last 2 years, how much stuff have I purchased in the Northeast, I would have said over the last 10,000 units we've taken down, I would say less than 20% of our portfolio has been in the Northeast.
Yeah. So
I would say I have seen far more New York, Jersey, Philly, Connecticut, Illinois, Illinois, Midwest, and East has been a huge concentration. But I'll give you a little bit of a secret sauce, which is if you want to get to houses and states within a bigger portfolio that you want, you got to take some of the bad with the good.
Mm-hmm.
And one man's trash is another man's treasure. So one investor will tell you New York, bad, don't touch it. Okay. So no worries. I'll take your New York on for the right price. I always use this example, but I have to use it. We all are, if any of us here are on this, we're all salesmen, right? We've all, at some degree, we're a salesperson. So if you see a rusty Volkswagen on the end of the corner and that rusty Volkswagen is worth $500, how many of you actually are going to take that $500, try to buy it and flip it for $1,800 to somebody else?
Of course.
Okay. So everybody kind of feels that. Now, what happens? You take that same rusty Volkswagen and it says for sale, 5,000. That thing's sitting, right? You're going to keep driving right on by it. Bad price. Okay. So for us, it's really about, I'll take your less desirable state if I can factor in enough discount to justify the return on holding that paper in that house. You know, it's because the reason why, just for you newer incoming investors, why New York, why New Jersey, why Maine and other states carry longer timelines and horizons than others, is because we call them judicial states versus non-judicial. The judicial system forces you to foreclose through the courts, where the non-judicial does not. So the system is much faster in a non-judicial state. So I'm sure you all can imagine that the COVID pandemic has definitely brought a backlog into the court system. Okay. There was moratoriums in place. You could not foreclose. You could not evict. And there should be no surprise to you all, but you probably haven't seen this in the headlines for years, but there was millions and millions of homeowners that had not made their mortgage payments for years pre-COVID. And you're like, what? The market was great. I never heard that. Well, they didn't want you to hear that. So, but if you're in the space like us, I was seeing tapes upon tapes of mortgages that had not paid since 15, 14, 16. And I'm like, they're still there. And then they got saved by the bell heading into cue the music. You got to re-edit this and cue the music. And so they get saved by the bell going into March of 2020.
Yeah.
Right? Pause everything. So we have a press release out. We just took down a trade in late July, roughly a $30 million trade from a major. And if you looked at the next due payments, which in our world is the last payment made on the mortgage, was 2016. I mean, if I check, we're in 21. So, right, they definitely got a 2-year kind of recess because nobody could do anything. And then they got a 3-year run of not making their payment. And I bet you most of you probably don't know this, but your mortgage has nothing to do with your light bill, your gas, your lawn maintenance, nothing. So you could be like, hey, Mike, and little do you know, he's not making his mortgage payment, right? And there was millions of those pre-COVID. So I'm very optimistic. I'm going to be one of those that is definitely thinking that the market is coming right to us. And I have many factors that lead me to that, and we can talk about that at a different time, but I'll just give you one sense. Why, Dave? And
So one of the questions I had in the feed also was, I guess they get burnt before. How many times are assets that are being sold by you guys the crap assets that you don't want? It just, it's the bottom of the barrel. It's the asset you've worked. There's nothing left in it.
Nate, you tell me. You tell me.
I'm making a living off of that stuff.
Right. So those who are listening, right, we bought assets too from, it's not anything to do with the fact that they can't do anything with it. There are other reasons why they sell that asset. They may be in a situation where they need to buy a bigger pool. They may need to recapitalize stuff, and they sell part of it to pay for the chunk they paid for. And then they're broke even, and they're in a great spot.
I'll give you one example. There could be a house in Philadelphia that is worth $500,000. It is 80% complete through foreclosure. The judgment's been entered. For the auction sale date is waiting to be set in the courts. To me, I'm at the 20-yard line. But today's the 15th of October. Okay. So I'm going into a little bit of a cold season in the East Coast. Right? I may, even if I got foreclosure back, how quickly can I get a GC out there to actually do the work? Right? Is weather going to affect me? And then when can I actually be able to stick a for sale sign in that property and eventually liquidate it and get my capital back out? So we all have different structures. right? And we all have different ways of returning capital. But that timeline for me could have been too long for whatever reason, because you don't know, I could have held that paper for a year already, sinking money into that file, pushing along that foreclosure to get it to 80%. And now I'm going to exit it at a decent number. Maybe I exit it at 62 cents on the dollar. So you're like, whoa, that's a good number. That house is worth 500. I'm paying 280 all day. Give me that. And so, or 300, whatever that math is. Guys are like, he's wrong. But no, it's like, look, and look, and we just sold a $500,000 home for $300K in this market, right? So again, one man's trash, another man's treasure. Just like, that's not a wrong thing to think though, Dave.
Yeah.
Regarding that comment made by that person saying, are they just selling the bottom of the barrel, right? But for us, we're called Revolve Capital.
Well, and what I would say to that as well is, it's like any real estate investing, you cannot get emotionally involved with the asset. So like, of all of the loans and properties that I've purchased over the years, I would not live in any of them. I would not move my family into any of those neighborhoods. I would not live in any of those properties. No, I just wouldn't. That's because that's not what I'm looking for. I'm, different priorities, all that. Not to say that any of that's necessarily bad, but it's just not right for me. It's not what I want for my family. And so that's not my stuff.
Just
However,
like stocks and bonds.
but the numbers work.
You're emotionally invested there.
Exactly. The numbers are what I look at. So did the numbers work? If I buy it at X price and I can resell it for X price, am I making money? Yes or no? And if the answer is yes, then what's the problem?
It's a numbers game.
Yeah,
And I
it's
think
totally a numbers game.
What people don't realize is they may have $100,000 to spend and they want to spend all $100,000 on one or two properties. And sometimes the best angle here is to buy 5.
Yeah.
Buy multiple properties because you don't know where the exit strategy is going to be. You have no clue where it's going to be, right? You don't know where that borrower is going to be in a month. They may re-perform and you're golden, or they may situation. So
yeah,
I think most people go into one mindset with this business instead of saying, okay, I don't know what's going to happen. As long as my numbers work for the scenarios, I'm good to move forward.
Mm-hmm.
And with what's going on in the future, and we'll get to that in a minute, I think the opportunity is to build your platform, build your structure, build your systems, make your connection, go to the Node Expo, right? Come hang out with Chad and shake his hand, right? Come say hi to me, Nathan. Start that networking now so that in 2-3 months, when things start happening, you're ready to rock and roll.
Mm-hmm. And as a different route, and this is a shameless plug for myself, but if you look at this and go, man, that's way too much work, I would rather just put up the money and get a return.
Yeah.
Do that.
Yeah.
There are plenty of funds out there, mine included.
Yep.
And put some money and park it somewhere and collect off it. You understand the business, but you think, man, it's way too much work. I don't want to do it. I'm not
Dave,
interested.
you said that earlier, and I wanted to kind of come back to that, Nate, which was, look, you've got Nate, who's a proven fund manager, right? He already has his infrastructure set up. He has sources set up showing him product. He has liquidation channels in the back. And that's not always easy to find operators that can kind of have that full cycle.
Yeah.
So a lot of guys, you can tell that I've come across, Nate, have said, look, that's a lot of moving parts. You got houses all over, man, you got to manage the servicer, man. I don't have all that, the ability to do that. I can completely understand what you're saying, but because this market definitely does serve an above market return, then park your money with a proven fund manager, right? Because you're not going to be able to acquire consistently real estate at these levels in this market, especially as we head into where I think we're heading to. Because truthfully, guys, I didn't get into this, but I don't need to get political with you. But if you're any new administration coming into 21, I guarantee one of your first major directives was to not let a housing crisis happen in the first 6 to 12 months of the presidency.
Yep.
Yeah.
Right. And if anybody is listening that's a landlord that has not gotten a rent payment since the middle of last year, then you completely understand what I'm saying. But the water behind the dam is only exceeding. It's not
Yeah.
slowing down. I hope
Yeah.
you understand. So
Yeah.
the dam eventually breaks.
Yeah.
Okay. It's
That's
just
just
at what point does it do that? And I think it has to strategically happen. I'll tell you, here's what I'm fighting a lot. What I'm fighting a lot is, yeah, but today's market's way different, right? A lot of people have way more equity, right? All they're going to do is stick a for sale sign and pay you off and do, okay, cool. At first, I probably bought that mortgage for a discount, so they paid me off. Great return.
Yeah.
Second of all, no. If your house is worth 500 grand and you owe 250, but you haven't made a payment since 16, you don't owe 250, honey.
Hmm.
I'm sorry. You owe me back interest, fees, corporate advances, escrow advances that have all been done on my behalf, foreclosure costs that have all been done on my behalf to A, salvage my lien position, and B, you've been able to stay in that home rent and mortgage free.
Yeah.
So no, you don't owe me 250. You owe me far more than 250.
Yeah.
Right? So I just want to make sure that like we're talking apples to apples when we talk about somebody being in an equitable position and then you don't make your mortgage payments for 5 years. No, you don't still owe that same amount back. It
Yeah.
doesn't work like that, right?
Yeah.
So we had another question regarding, there's a lot of talk about CFDs. What's your perspective about buying CFD versus mortgages?
There's gray areas of CFDs with different states than there are with mortgages. And I don't like a different rule set in certain states than there are in other states. That's a personal fund management preference, but I'll just be honest. We have 5 homes today that we finished the foreclosure on. The people in the homes were salt of the earth. We kept them there. We put a CFD on them, and we're going to let them continually make payments until at some point they get in an equitable position and maybe they get themselves back to home ownership. But truthfully, in the meantime, I'm going to liquidate those CFDs for hopefully a higher number than I acquired them for, and they're off the books. But I have nothing harmful or bad to say about them. But for me, I like to be in the senior position, head honcho, bank. It's not egotistical, I promise. I've been in this business far too long. I don't like seconds because I want to be able to call the shots in the first lien. And CFDs at some point in the race, the borrower then gets back leverage, and I don't like that as much.
Yeah.
I like to keep the leverage. So again, it's kind of a management style thing.
Cool.
Yeah.
Well, before Nathan goes
I like
into, I know he had a hard stop at 2. I'm looking forward to seeing all you guys, including those listening, in November, in about just like 2 weeks from now, right? So definitely shake hands, come out and say hello. This is when the networking happens. That's when you find assets. You talk to Chad and say, listen, I want to buy stuff in Hawaii or whatever, talk to them, knock it out of the park and have that personal conversation. When you make that phone call, it's no longer cold, it's warm, right? So,
And it's okay to still be there at Note Expo, to still be learning and getting comfortable. We welcome that.
yes.
But I'll just tell you, as somebody, I'm going to be speaking on a panel. I'll speaking at a Note Talk, but the Note Talk, just so you guys know, is a little bit more about like who I am as a person. I think it's very important to be in this business and realize that we're all humans. And the reason why I'm doing this right here on a Friday afternoon is not because I paid or they paid me to get here. It's because of the relationship and because I enjoy seeing this entire space continually grow. And that's just from the bottom of my heart. And because I know that one person on this call is going to connect with this, and that person probably is going to become a player. And to me, that was worth hanging out with the two of you before I visited. And also, you just never know. You never know, because as the market's coming to us, and if you're a savvy enough person to get some real money behind all of this, I think real wealth and riches are coming because you're going to be able to acquire real estate for dirt cheap. And so,
So we often end off talking about what do we see for the future, and we've kind of touched on that already. But so let me ask it a different way. What do you say to those people who say, "Oh, there's just no deals out there. There's just nothing to buy anymore"?
are you looking? Like, I heard this the other day about like resourcefulness. And today, I believe that we are in a era that is the most resourceful we have ever been, right? If you can imagine some of the most tragic times in history, what would have happened if we had social media? Because it would have been real time. You would have seen this stuff real time, right?
Yeah.
No delay, and no filtered way of getting it. And so, what all that means is that, you know, guys like myself and others that do sell in this arena are so out there. We're looking for credible, legitimate people. And I am living proof that we're a 3.5-year-old company. Prior to this, I ran 2 fairly successful companies that I worked a lot with these 2 guys on, selling a lot of product there. And it really helped Revolve get off the ground a few years ago. And that being said, I've realized that we are seeing more NPL flow in the last 3 years than we've ever seen in the 3 years prior. And that is, I feel that we haven't even started about what we're going to see in 22 and 23.
Yeah.
So you got to keep in mind that Fannie Mae and Freddie Mac own 1 out of every 2 mortgages in our country. That's a fact.
Wow.
That's a fact. Okay. And they have just put out 1.9 billion in Q3. You can Google it. You can find this. That 1.9 billion is broken down into 4 separate pools. And as our government starts to move through this product, others will follow suit. And I'll tell you, when you have product that's been on your books for years and years and years, not making payments, and that's in the billions, right? Everybody here listening should be the beneficiaries of that product hitting market.
Yeah.
So thanks for having me, guys.
All right, guys. Well, definitely stay tuned. We'll be on in a few weeks. We'll be seeing everyone. Enjoy. We're going to disconnect from the live. Hope everyone has a good weekend and we have some fun. Enjoy, guys.